So for those who don't know, Flipkart is the largest e-commerce site in India. Right now they have 48% of the e-commerce market compared to Amazon that just has 26% of the market. So huge share, half of e-commerce transactions go through Flipkart. And in 2023, they grossed about $23 billion in sales in just a ballooning e commerce market that's growing about 20% a year in the most populous country in the world. I mean, it's safe to be bullish on Flipkart. But in 2009, Flipkart was just a couple guys in their apartment packaging and shipping books themselves. Sound familiar? Maybe you listened to the Kleiner episode, or maybe you know anything about tech business, and this sounds like a familiar company founded in the 90s. I'm not going to tell you who, I'll let you figure that out. Anyway, many people today are obviously bullish on India. It's essentially a consensus opinion that there are many technology companies to start in India. And as the company continues to be pulled rapidly out of poverty and develop a middle class into an internet dominated world, a lot of companies will flourish and a lot of tech companies will grow rapidly. But in 2005, when Accel entered India, opened up an office in India, making a very large statement, India was basically an afterthought. I mean, everyone was going into China in 2005. This is around when Alibaba and JD.com were being started. China was starting to blossom, and most VCs were opening their offices there and looking there for opportunities, similarly to what we are now seeing in India today. But Accel wouldn't be Accel without being contrarian, insightful, and constantly ahead of the curve of massive technological innovations. And so the story of why Accel invests in Flipkart begins with this long-standing thesis of Accel, though recently re-articulated by partner Sarah Idelson, which I'll say now, which is, quote, a lot of innovation happens maybe in pockets where people aren't looking. When you think about a lot of the founders that we've talked to, it's not that they got working on this project in the last 12 months, it's that they started it in 2017 or 2018. And this has been a long love, passion, and exploration of the cutting edge of technology. And it's just now coming to the forefront. But I think an observation was just great innovation is happening in little pockets where people aren't looking, things that are outside of the flow of conversation. They'll become apparent in 5, 7, 10 years from now and will be really life changing for all of us as consumers, as operators within enterprises. End quote. So, as I said, Accel was essentially on their own in India in 2005. Very few VCs were operating in India. I mean, very few are still operating in India today, but in 2005, there were basically none. So, this was certainly a pocket where people weren't looking, as Sarah Idelson said. I love that phrase. And so, since they were so early, it took some time to get their feet off the ground. You know, as common with the venture capital industry, it takes time to see whether these investments will, accrue any value. And it took them a while to understand the India ecosystem. Again, it was not a big tech market in 2005. There were very few technology companies being started, but they remained patient. And all of that changed in 2008 when the Accel team met the Flipkart founders, Sachin Basal and Binny Bansal. And so I have a chart on my Substack at All Things VC if you want to go there and check it out. But essentially, it shows the e-commerce market in India. And the chart's kind of redundant because it only goes back to 2017, but based on the ridiculous growth rate shown in the chart, it's safe to say that the Indian e-commerce market back in 2008 was probably around $5 billion total. The entire all commerce bought online in India, a company with over a billion people, it's only $5 billion. I mean, in comparison, the US e-commerce market in 2010, just 2 years later, was about 150 billion with a lot fewer citizens. So just an insane contrast between the two markets. So $5 billion, the entire e-commerce market of India, definitely not a big market. Very few VCs will invest in $5 billion markets. That is not big. You have to have 20% of the market to reach $1 billion market share, which is typically what VCs are looking for. So not a large market. But the Flipkart founders were just so scrappy and driven to capture the Indian e-commerce market, which they knew had massive potential. And so Accel partner Samir Gandhi describes his experience when visiting the Flipkart founders' apartment, which was also their office. He says, quote, "In those early days, Sachin and Binny worked out of a makeshift office as they put together the beginnings of one of India's first e-commerce businesses. One room was their warehouse, the second housed the tech team, and the third was customer support. And one thing that still sticks with us is how they promised to usher in a revolutionary customer first approach to their business, which, even though Flipkart had scaled thousands of times since, remains one of the core principles of the companies even today." End quote. So, again, the Amazon comparisons are just ridiculous. I mean, a founding principle of excellent customer service that still rings true today, and starting off with selling books. I mean, they had to have based their business off Amazon. That had to have been the inspiration, which is, not a bad move, certainly. But even so, India in 2008 was still a vastly different world than America in 1996. I mean, it was somewhat similar in the just minimal internet adoption, but different worlds in terms of just consumerism in general. I don't think people in India in 2008 were just buying as much generally as people in America in 1996. I mean, certainly not. So it was not obvious that the e-commerce market in India would grow to be a large market, let alone Flipkart being the company to lead the charge. There were two factors at play in this investment: whether India would grow to be that huge market from 5 billion to what it is today, I think around 80 billion. Would it get to that large enough market size? And with Flipkart, this company with a few people working in their apartment to pack and ship books, would Flipkart be the company to lead that charge, to basically to catalyze the increase of e-commerce in India? So there's so much uncertainty that Accel was actually the only investor to give Flipkart an offer. Many VC firms passed, and obviously any VC they met with passed, including Sequoia, who apparently passed multiple times. And just another caveat, it always amazes me how every investor can pass on a startup. I mean, I don't know how many investors Flipkart met with, but I mean, if they got with Accel and Sequoia, they had to have pitched a lot of VCs. So it's crazy how so many VCs can pass and only one investor can, actually invest, especially when that one firm is Accel, which is exceptional in its own right. You'd think if a founder was struggling to raise money, they'd eventually raise from a lesser known VC or a lesser known angel investor, but no, it was Accel that led this round. And so, I mean, it's just another reminder that the best investors are non-consensus and right. And Accel, being the only offer to the Flipkart team, was as non-consensus as possible. And as we'll see later, right to the tune of billions of dollars in returns. So yes, Accel believed in the founders. These founders were exceptionally focused and supremely driven by delivering the best experience possible for the customer. Obviously two fantastic traits to have in a team: ultimate focused and customer obsessed. But like I touched on many times, this was just as much a bet on India as it was on Flipkart. After all, the Indian e-commerce market would have to grow, or else Flipkart would never scale. So obviously we know Accel believed in India, or else they wouldn't have opened an office in Bangalore. But Accel partner Mahendran Balachandran once described the founding thesis of Accel's India office as follows. He said, quote, "I think for India, the theme has always been one big theme. It's these zillions of opportunities for you to dramatically increase your productivity cycles across all industries. That has been a very common theme, whether you're in e-commerce, mobility, or food delivery. Systematically go look at every element of it. You're just basically removing a lot of inefficiencies in the whole system, across the whole of India, across all spectrums of consumption, across all the ways you educate yourself, across everything. It'll permeate across the board because there's so much of an inefficient system. You just have to take them all out one after another." End quote. And so as we touched on with Scale AI, Accel believes in finding technologies to unlock production. And India has a lot of pent up production. I mean, these have always been very smart and hardworking people within that country. And as internet adoption continues within India, the country and its people will flourish because of that. And so, since Accel embraced searching for opportunities to unlock production in pockets of the world no one was looking for by investing in India and by investing in this small, scrappy founding team of Flipkart, they led the charge of not only investing in Flipkart, but investing in India by leading an $800,000 seed round into Flipkart in 2008. As with any company trying to build their own distribution network, as we saw with Amazon, Flipkart raised billions of dollars, with Accel reportedly investing somewhere around $100 million total in the company to amass a 7 to 10% ownership stake by the time Walmart bought a 77% ownership stake in Flipkart, valuing the company at $20 billion. This was in 2018. So Flipkart, an Indian e-commerce company, went from zero in 2008 to 20 billion in 2018. Unbelievable job by the Flipkart team. That's insane speed to reach those levels. Levels that valued Accel's ownership at somewhere between 1.5 to $2 billion, 15 or to 20xing their total capital invested of that $100 million, but 2,000 to 2,500 times their money on that tiny, very non-consensus, supremely non-consensus $800,000 C check into Flipkart that catalyzed the entire India tech movement as a whole, essentially. So again, Accel was non-consensus and right to a degree that I certainly don't think I've ever covered in this podcast before. I mean, that is just insane confidence in India and in the Flipkart team, and they were certainly rewarded for it.